JP, let's talk about some of the factors that led to Lightspeed's performance in Q4.
Yeah, so look, we're feeling good about the quarter. We exceeded our guidance. We raised our guidance for next year, and we gave a clear path to profitability to the market. So we're feeling really good about where the company lies. We also, as you know, delivered two of our major products in the quarter: our new hospitality product in North America, and we also delivered our new retail platform, which integrates omni-channel and all the integrations we've done. So yeah, feeling incredible, and I think the company's in a really strong position.
Dominating headlines are interest rate increases, inflation, the possibility of a recession. Are you concerned about that?
No, we're not. So I think first of all, when you think about a recession and you look at what happened, in the last 2 years with COVID, this was more than a recession for us. Given 90% of our GMV is offline, is in physical retailers and restaurateurs, asking them to shut down was, of course, more than a recession. So that is not worrisome. We feel that the return to physical and the new demand that we have for our platforms, bundled with our payments deployment that is doing really well, should offset any kind of recession. The last thing in my mind when we look at recession is our customers need to do more with less in that context, and that's really what Lightspeed does. We help them automate processes, we help them automate how they work with suppliers, their workflows. So that should also be a strong drag towards platforms like ours.
You mentioned profitability. When companies like Walmart say that food inflation is hurting consumer spending, and they pretty much set that pace for consumers, does that change your outlook at all?
No, it doesn't. So we're a software company. So the majority of our revenue comes from people who are paying money on a monthly basis, a fixed fee for buying the platform. So regardless of the variations of the cost of goods or the cost of buying or selling, we are the core platform of our restaurateurs and retailers. So that should continue. And then when you look at GMV, which is the portion, from our payments, because we just deployed in Europe, because we just deployed in Australia and New Zealand, there's a big uptick of customers buying payments from us. So that should offset the slowdown in GMV.
The last time you and I spoke a few months ago, we talked about the acquisitions that Lightspeed has made over the course of its career, if you will. How do you plan to grow the business going forward? What's the strategy? Is it build? Is it buy? Is it partner?
Yeah, so look, we made these acquisitions for a reason, because we wanted to go to market with better products and go globally to market with better products. So all these acquisitions had a reason to be. We've known the companies for a while. And I think that's what makes me the most excited is if you look at the new products we launched. So our new hospitality product is really the best of all the acquisitions we've done, that we've bundled into one incredible experience for customers. And the platform we just released in retail, our new retail flagship, is really a combination of all the acquisitions we've done and our know-how. So I think for us now, the strategy going forward is really to continue to deliver value to our customers, to continue to drive productivity for them. And on that front, it's just continuing to plow ahead. And there's a lot of demand. We have 163,000 customers now in a market of 7 million buyers. So there's a lot of room, a lot of white space, a lot of space for us to grow. And that'll be the main focus. Now, this being said, we're always going to remain opportunistic when we see, companies that we admire, that we want to join the company. So we'll keep our eyes open. But today, the majority of our focus is going to be on operational efficiencies and driving our new products globally.
When you and I spoke a few months ago, you mentioned there were 300 openings at Lightspeed. Talk to us about whether or not you filled all those positions and whether or not labor challenges have been affecting your company.
Yeah, so I think like all tech companies, labor challenges have been incredible. We've fulfilled many new jobs in the last quarter. But because we're a high growth company, regardless of the acquisitions, we're growing by 48% organically. So that means our headcount needs to grow pretty much in line with that. So there's a lot of new openings. We still have that same amount, but that's normal because every quarter we're hiring more people and we need to fill the new. So very much in line with where we want it to be. We launched our new headquarters in Montreal, where we opened new floors. We created, we have baristas, and we're trying to make the experience for every new Lightspeeder even better than before. And obviously the goal there is to keep our great employees and to attract a lot of new ones.
In Q4, of course, you've reported that revenue is up. Your losses are at around, 5%. You had a tough go with that short seller report in September of 2021. Do you think that investor sentiment has changed now, especially with this latest round of news for Lightspeed?
Look, I can speak to what we control. It's been now 13 quarters in a row, 12 last time we spoke, of us, meeting and beating expectations. We've raised our outlook for next year, and we've delivered the product. So I think, as they say in the UK, proof is in the pudding. I think we are delivering on what we say we're going to do, and I mean, our investors are going to see that at some point, and the stock should follow. But I think for us, again, we're focusing on what we can control. We're building a long-term company. We want a company that creates a ton of value long-term, and that's the focus of Lightspeed.